Check, check, check. Good morning. So here we are on ES. If you watched yesterday's live stream in the PM session, it kind of played out how I said, it was just going sideways. I ended up not really trading. Well, no, I traded, but we just declared it was going sideways, and then I didn't watch the last hour of trading. That's what happened. You can see overnight we consolidated in London. We came down, swept the sell side, and went to the upside. So what I have on the chart here is we have yesterday's PM session, buy side and sell side. And if you look at ICT's one setup for life video, you'll understand what this is. I think it's very nice. Like, it's good context calling out the liquidities for me personally, because when I don't have these on my chart, it's easy to think, just like kind of get caught in like a trend following mindset. On the daily, we're still in this daily for value gap. So this, again, I'm kind of thinking of this as a retracement from this aggressive drop down we have. This daily fair value gap is at a 50% level from this high to this low, and we can see yesterday we kind of wicked slightly above it. So it looks like we're just now entering a premium if we do want to go and sell off to this weekly level at a discount. What I'm watching is, and this is going to be hard because they're really just going to wait until CPI to do this, in my opinion. If they want to send it above or below this fair value gap, it's not going to happen until, I think, let me pull up the economic calendar. CPI is tomorrow. So today was PPI at 8:30. CPI is tomorrow. And they're going to wait till tomorrow to really send this lower or higher. And that's why you'll notice whenever there's like a big news event, we're always like either in the middle of a range and have been consolidating, or we're at like a pivotal PD array. So it's that PD array is this daily fair value gap. If you go into the 1 minute, you'll notice I have this 4-hour wick called out in green. The green's a little hard to see. I'm gonna need to figure out a better color. I was initially trying to make my 4-hour levels green. I think it's not too hard for me to see, but I think it's harder for you guys to see. But this wick, the consequent encroachment of this wick, is denoted by this dotted line. It's a 4-hour level, and if you notice, we wicked up to it perfectly. Beautiful to see that. I am using that wick to kind of figure out the draw on liquidity today. I'm preparing myself to have a very nimble mindset today. Since CPI is tomorrow and we've already come up to this daily level yesterday, that's why there was so much movement yesterday. I think today it might be a small range day, might not be a small range day, but we're going to be nimble mentally in case it is. I'm using this consequent encroachment on the 4-hour as like a line in the sand on whether we want to actually attack this high, yesterday's high. If we start showing a willingness to go above this consequent encroachment, we're definitely going for this high. So we had that one drop down at news at 8:30, 2 run it up. We're working inside of this fair value gap. Gonna wait for the opening range at 9 to 9:30 to kind of figure out where we're going. If we get below this low right here, I'm liking downside. If we don't get below that low, you start to show some closes. You can see we came up. We might form a 3 drives pattern right here, but I love how we touched the consequent encroachment of that 4-hour wick so well. And my higher time frame narrative is that we are going to leave this orange area to the downside. So we just gotta Just got to be patient. I think yesterday, I made a mistake yesterday. I tried to like call a top yesterday when we were finally reached. It was 10. I forget when it was. It was like 10:30 when we finally reached this orange area, and in my mind I was like, that's my level that we're gonna go lower after we hit it. And then I was trying to get shorts up here and ended up getting stopped out. But that's something for your journal. Just remember, if 10 o'clock starts and we're running up this aggressively, the draw on liquidity was daily wick that was way over there, but I got a little too ambitious trying to call top. So yeah, we had this one sweep of the sell side on London and the overnight sell side, which is what indicated us to go higher. If this sweep wasn't here, I would definitely be super bearish. Still expecting downside price. I think I'm leaning that direction, but I'm definitely going to wait for the opening range to figure that out. I mean, CPI tomorrow, we can't try and be too convinced on any direction when you have the CPI coming out tomorrow. Basically just have to wait. Gonna go over to the 3-window time frame. The dollar is also, we'll go to the dollar. See, the dollar is dropping still. I think we're going to return to a lot of these levels we had on the weekly chart. We just had so many weeks of dollar to the upside that it makes sense. Market doesn't only go in one direction. It has to ebb and flow. So if we go up like this, we eventually have to pull back if we want to go higher. So these 2 down weeks in the dollar make sense right after we hit this liquidity right there, tapped into it. ICT was saying this in some of his reviews. He thinks the dollar is going to go higher. He thinks this is a pullback. He thinks we're going to take out this liquidity and the market's going to go a little lower. I like and agree with that take. But as of today, yeah, the dollar could still go a little lower. I wouldn't be surprised if this down close candle held off price and we could get down and tap into this volume imbalance and then, close a little higher. And that would give us, that would be enough to give us like a bullish day without like shifting the actual higher time frame narrative that we were just speaking about on the weekly. Yeah, so that was the context for the dollar. The dollar is also here on this yellow line. I like to keep it on the 1-minute chart. Gonna take a quick look at NASDAQ on the 5-minute. Yeah, so these highs on NASDAQ look a little more like equal highs. Noticing this SMT divergence. So this was a higher high on ES. It was not a higher high on NASDAQ. Interesting. Go look at the Dow real quick. I want to see. That was a higher high on the Dow. ICT tweeted 9 minutes ago, if you are trying to trade in this, you are gambling and begging to lose your money. Trust that. I'm sure that is coming from this idea of just the news drivers CPI tomorrow. I also noticed, I was kind of looking how price was a little disjointed on ES. You can see some of the opens and the closes don't line up perfectly. I'll tape read. I'm gonna hold off on taking a trade unless I see a really primo setup. ICT sometimes he's funny. He says if you're trying to trade in this, you're gambling and begging to lose your money. 9 minutes ago, and then 2 minutes ago, he calls out some buy side on NQ. The buy side he called out on NQ. Let's look at that. He called out 15,345, which is what we're taking right now. I mean, that was a little obvious. Okay, so we took that on NQ at the 9:30 open. Coming down. Yeah, so we didn't take that high on ES, but it makes sense. I'm wondering if we're starting to see a little bit of a decoupling on the indices. If you notice that, it's hard to see in this window down here, but that wick, because the wicks are gray, this is taking out these highs on the 5 minute for NASDAQ, whereas ES isn't taking out the highs. ES might take these highs, and then I would like it as like on the 5 minute of 3 drives pattern, which is a high, a smaller higher high, then a little bit of a higher high before turning around. NASDAQ is definitely the leader to the upside. I'm gonna look at this wick. Yeah, so for NASDAQ, that's definitely the next draw on liquidity for the upside. But I'm starting to see a little bit of a break in correlation between NASDAQ and ES. NASDAQ's a lot stronger. Okay, so we had ES come up, take those two highs out. But if you notice, it's still really far. Still hasn't passed that wick. Still hasn't closed above this 4-hour wick. It might. I'm liking the idea of downside a little more, just because I like this wick on the 4-hour, and I like how we've been respecting it. So I like that we just formed 3 drives pattern, all with one touching, one wicking above, but none closing above that consequent encroachment. So if we start to see if we start to see price drop and take out this low, and the dollar is also going higher, I would like shorts going into 10 p.m. Targeting this sell side liquidity. NASDAQ is, keep an eye on NASDAQ. Because if these two markets start doing different things, then we probably won't trade. So what different things would look like would be, so NASDAQ, look how high NASDAQ is above these highs on the 1 minute versus what ES is. ES wicked above them, but NASDAQ is closed 1, 2, 3, 4 candles above them. So if NASDAQ pulls back, but that would mean like, if NASDAQ pulled back and made a higher low, but ES pulled back and it was like down near these lower lows, there'd be kind of a discoupling. Day before CPI, I mean, that's kind of why ICT is saying you're gambling if you're trading in this. We're still coming off of that losing streak. We're not on the losing streak anymore, but definitely going to play a little more conservative. You know, I think, yeah, just definitely be a little more defensive. I think it's good to be aware of, you know, where you are in your trading, and letting that be reflected in how you trade, which is usually just like taking less trades and downsizing. Watching on the 15, we came down a consequent encroachment of this 15-minute wick. NASDAQ is still really going up. Yeah, the unwillingness in ES to kind of drop after taking these highs makes me think we're going to go higher. Normally, if I'd wanted to see it go lower, I'd want it to take out that third. I mean, we still have some time where it could play out, but that's not enough for me to get interested yet. I mean, yeah, it's a big down close candle, but this is a big up close candle. I'd want to see a few of those to the downside first. We do have the dollar that looks like it's trying to make some new highs. Yeah, so just check out this open. It's ever since 9:30, not much to go off of. I do really like how this consequent encroachment has still been kind of suppressing price if we were looking for downside price action. I wouldn't be too interested until we get below this low aggressively. That's why I've been kind of silent, because it's just been not doing too much. I can see NQ is finally, it's getting low. Remember, just NASDAQ is more volatile and has more exaggerated runs than ES. So the fact that it ran up like this, if it comes down and takes this low, if it takes this low out and ES is taking its respective low out, then this was just a purge of liquidity, and we could see some downside, but this just emphasizes the volatility that NASDAQ brings to certain things. which can work in your favor and can also work against you and screw you. I mean, anytime something seems like a good idea in trading, or like you want to do it because it could get of X, there's always a flip side of that coin. You want to trade NASDAQ because it runs more. Well, it can run against you more. You want to trade more contracts because you can make more money. Well, you can also lose more money. You always have to think of the antithesis. I don't know if that was the right word. The flip side of the coin. Because until you have like a track record, until like if you look in your journal and you have, say, 6 months where you're trading above, like well above 50%, you're like 6 months trading like 65% plus, then you can be like, oh, okay, well, now I'll start to size up and try and swing for the fences. But if you're not well above, if you don't have like a documented track record that you're well above that 50% mark, then the risk that what you're trying to do could go against you is too high. Watching the dollar drop right here. Came up. I was hoping it would come down, and then start taking out these two highs, but it's going a little lower. It's kind of really just going sideways, which is probably why the market's going sideways. Yep. Yeah, today, like I said, today could very well just be a very small range day. Dollars dropping. Might see some of these highs taken out now. Part of me would want to kind of, if the dollar continues to drop, take a trade going long if we start closing candles above this 4-hour wick. But that's, you gotta remember, that's not in the trading model that this YouTube channel is trying to show. If you watch the rules video, like the intro videos that I posted between 9:30 and 10, the model we are trying to trade is the 2022 model. So we don't really have a 2022 setup. One of the rules I impose on myself for that model is there has to be at least a 5 or 15 minute high has to be taken out. So if we were in this hour to come down and sweep this low and then go higher, we could enter. We could justify it to the downside. So we have these 3 drives. We have the constant encroachment. We took liquidity on the 15 with that candle and on the 5. So if we got that's why I was saying these lows, if we got a shift in structure to the downside that showed like it really wanted to get down here, we could enter, and it would constitute as a 2022. model. So that 2022 would be taking liquidity on the 5 minute, on the 15 minute. It might be playing out right now. So I want to see how this candle closes. If this candle closes well below that wick, yeah. Okay, we'll look for a fair value gap to enter in on. I'm expecting this to be a little bit of a scalp, because if we are in a range right now, it could turn back on us. So I would actually like to see this be left open. I would like to see a fair value gap form right here. So I'd like this to come down. I'd like to see a fair value gap here form and enter in on that. Let's check NASDAQ real quick on the 5. NASDAQ also took out this low. There we go. So we can put our stop right here. Have the dollar. Looks like it's might be going lower. So something we have to watch for too is, are we taking this 5 minute? It's also a 15 minute swing low right here. And is it taking that for liquidity to go higher? So if we started closing above these fair value gaps, I would re-enter to the upside. The reason I'm going downside is because we had these 3 drives pattern on ES with the consequent encroachment holding it down. But we have the dollar dropping right now. Yeah, so we'll see. Definitely, this is like showcasing why it's not the best conditions. It's not like super high probability. We have the dollar going lower as well as ES. But I'm basing this trade off of this 3 drives on ES under the 4-hour consequent encroachment. I don't like how the dollar's still going lower. I might exit this trade. I'm gonna wait a candle or two. You know, I'll leave the stop there. Dollar's still going lower. It can touch the bottom of that, but I want to see it go lower. I'm going to move this to break even just because if it was to come up back and touch this fair value gap again, I still don't care. I just want to enter it and see if we can get some movement down, because NASDAQ still didn't take out this low right here. We took it out on ESC, but we didn't take this out on NASDAQ. And I kind of outlined that flip side, the bullish case. So right before I was saying a bullish case to the upside would be if we take this low out on the 5 minute, we could send it higher. Low probability day, just trying to get in and get out. So if it, again, I want to see it tap into that and then just go to our target. If it doesn't and we get stopped out, that's fine. Because even this opening range was, this like price action was very back and forth. It's very choppy. Like until we take out these lows, I'm not expecting much of a downside. Look at the dollar dropping. Dollar's dropping. So I don't want to be long. I mean, I don't want to be short if we have a plummeting dollar. This dollar's breaking. The reason I keep scrubbing like this is I keep paying attention to this low on the dollar, and the dollar is taking out that low. So this is what I was talking about earlier about being nimble. In the scenario, so like scenario, where's my trading view has been acting weird. Like where is this, the stop loss box? Okay, well, I don't see the stop loss box anymore. I'll just manually exit it. Yeah, I don't know if you guys are seeing this on your end. I feel like I moved the stop loss. It's another reason why sometimes it's annoying if you like try and move these boxes right over the initial entry box, because then it kind of gets lost. Yeah, I don't know where that stop loss box is. I'm going to manually exit if we come up to this line. Or maybe I should just manually exit now. Yeah, that's weird. I don't know where that went. That stop loss box. It could still come down to this target. And then I just looked at ICT, just tweeted 14 seconds ago. There is 0 in this that would be from on anything algorithmic. Go into the gun range. Be safe. Yeah. So that's one of the reasons why I was like, if it enters here, I like scooted that stop loss up really quickly, because like I moved it from here and I just moved it to break even immediately, because it was like we entered and then see this displacement. We had this displacement that left the box aggressively. So it's like, okay, we re-entered on this fair value gap. We displaced aggressively away from it. I'd want to see it continue that momentum away. If it came up into this and then kind of like did what it did right here, but in it, that would be better than displacing and then waiting at the bottom of that displacement. It just did it again. So we would have got our 5 handles on ES to the downside. I did get a little squeamish because that stop loss box disappeared. I'm going to have to go and watch the replay and see if that disappeared for you guys. My trading view has been kind of acting weird lately, the past 2 days. But when that stop loss box disappeared, I was kind of like, I'm exiting this trade, because see this candle. Let me send this backwards. This candle to the downside. this candle to the downside, that could have easily been a candle to the upside. And then what happens is you justify it. Oh, is it going into this? So that could have been a big candle to the upside, and I would have had no stop loss. And then it could have ran. It could have looked like this. It could have went up. I don't know what would have happened. It just happened to go in the direction that we wanted it to. But, why trading is so difficult is because you're kind of like, this happens and it's like, oh my God, if I didn't exit that trade manually, I could have just, I would have got my 5 handles for the day. And then you could have other, I could kind of say that. It's like, look guys, I can trade, I can get my 5 handles for the day, but it's like, that's not the best risk management. I didn't know where my stop loss went. My trading view was acting weird. Then right after I exited that trade manually, ICT tweets, there's nothing algorithmic about this price action right now. So you can see, so we just dropped down, came up. Yeah, I'll probably sit the rest of the day out. Wait for CPI tomorrow. Again, so I still have the same idea for the day. As long as we're not closing any candles on ES above this consequent encroachment, I'd expect downside. But I think after showing this 3 drives pattern, 1, 2, 3, and we did get some, I don't know, decent movement relative to what the pre-market was. But it hasn't really been showing a willingness to go down. Also, another thing that's kind of hard about this is we saw it deliver. We saw it deliver to our target, and now it's like, oh, I was like, you have that thing where it's like you feel like you were right, but this price action isn't right, so it's more randomness. I would take a silver bullet to the downside. I still have the urge to do that. But not going to. Yeah, so this is the only trade taken today. It's negligible. I wouldn't call it a win. Yeah, and see, this is starting to come back up. I wonder if the reason TradingView's been acting weird is because I've been copying these tweets lately. I just started doing that the other day, and that's also one like right now my TradingView is kind of freezing up. It's lagging. I wonder if it's because I'm putting these tweets in here. It doesn't like that. It's like too much. Yeah, so I got to find the little wins. I take a little bit of pride knowing that I manually exited that trade when I was like, I don't think this is how price should be behaving. And then I look, ICT tweets this, but then we get our delivery to our 5 handles, and it just kind of goes to show how hard trading is mentally. Because you have to battle with this, like, am I right? Am I not right? Am I lucky? Am I not lucky? Was I right? Was I not lucky? Was I right in entering here and expecting it to go 5 handles? Yeah, technically price delivered that way. Was I right in exiting right here for 0.75 handles of profit? Yeah, I was, because, and I mean, we have it confirmed by his tweet. When price left this fair value gap that aggressively, it should have continued leaving that aggressively for sell side, and it just stagnated, dropped a little bit again. You know, this is what it wants to do. This is the draw, but then it comes back up. And for example, you know, I'm showing in this YouTube channel, you know, take the first 5 handles every single time, but that's very, very low hanging fruit. That's like the bottom. That's like the first low hanging. That's like level 1 for trading. And if you were somebody who wasn't on level 1, you were on, say, level 2, and you're trying to take 10 handles, you wouldn't have, let's see, would you have gotten it? Yeah, it barely went 5.5 handles. You wouldn't, if you were somebody who tries to take 10 handles out of the market, you would not be there yet. And I'd be pretty nervous with this consolidation. It's looking decent. We just came back up. We tapped into this 5-minute fair value gap, so it's going lower. Yeah, it's interesting. This is super interesting topic in trading, when it's kind of like you form a hypothesis and you enter a trade on it. You then exit prematurely because you think it's not behaving the way it should, but then it delivers to your target. So the question is, were you right or wrong for exiting the trade early? And it's interesting because it's just like, it's really easy to say, no, you were wrong for exiting the trade early because it delivered. But was the delivery random or not? So if the delivery was random, then you are actually correct for exiting the trade. And because we're not trying to trade randomly, we're not gamblers, we're doing everything for a reason. So in these candles right here, after the way price delivered, I was like, this is not delivering the way it should. I exited. It wasn't random. We had the confirmation by the man himself here. Yeah. Look at NASDAQ. Yeah, because as soon as both NASDAQ and ES got below this low, I would have wanted to see like this low and this sell side taken. And now it's just, look at this range. It's just down, up, and now we're in this range. Probably watch like the first 30 minutes of the 10 o'clock. I kind of want to see if it ends up running for this or if we reverse. I just want to see where the real draw is. I'm pretty sure the draw is to the downside, but it's lack of willingness to get there makes me not want to even trade it. Yeah, because you saw these 3 candles, 1, 2, 3. So I was like, that's awesome. These are 3 1-minute candles. It's just really like a decent 5-minute candle. what printed there. I would have wanted to see another 5-minute candle like that, and I think the entry would have been there, but actually I want to keep the dollar on. The dollars, I think the dollar is also helping tell the story of, look at these lower lows on the dollar. So we have high, low, lower high, lower low, lower high. The dollar is making lower lows, and so are the indices. Yeah, it's going. The draw is definitely, this is definitely the draw. Something I'll probably talk about in my journal is I was proud of how quickly I entered off this fair value gap. I think, if we didn't have CPI tomorrow and it wasn't high resistance conditions, this would have been a beautiful entry and trade. I mean, it was like kind of random, kind of. It wouldn't have been bad if I let it play out. It's funny, we're 1 minute away. We were 1 minute away from getting this candle delivering to our target. But yeah, I'll talk about how I was like proud, because something that happens is, these days where it's like really high resistance and it takes forever to get to your targets, they've been happening a lot lately in the market just because of, the economic conditions we've been in. So then when it is smooth sailing and it's low resistance liquidity runs, it's kind of like this will happen and I'll just like wait for like a second entry, and then you just never get it because you don't really get, sometimes you won't get those second entries on low resistance liquidity runs because it wants to run to it. It's going to it quickly. You have that one entry and then it's off. And I think I've been also seeing myself do some of that lately, like the hesitation on the initial entry. And it's like I'm waiting for it to be too perfect. That's another thing is, sometimes, something I was thinking about recently is by the time it's going in a specific direction, it might be too late for you. Because it's like, look, we know, like, it's definitely going to go down here now, but we said that after we saw this low, high, lower low. Dollars turning now. Yeah, so we had the draw on liquidity correct. Just a little high resistance to get there. But I'm fine without it. If you think so, silver bullets this session, you could have called this the silver bullet. Right there. We did not enter on it, but the draw on liquidity was definitely to the downside. We kind of saw that in what we outlined with this 3 drives pattern, 1, 2, 3, all staying, touching but staying under the consequent encroachment of the 4-hour wick. So we had the 3 drives pattern, and then we waited for the displacement lower. We ended up entering on this 2022 model. Then it came up, displaced lower again. Fair value gap, delivered to the downside. I didn't really have an interest. I mean, so what happened right here, this pullback, if you look on the 5-minute chart, it was really this candle with the wick. It was entering this 5-minute fair value gap, which happens a decent amount. I've been noticing is what will happen is you'll get a displacement on the 5-minute. So you get this candle, the displacement. And then on the 1-minute, you might enter in a fair value gap on the 1-minute, but that next 5-minute candle kind of is just like a smaller candle. It doesn't continue the displacement, and what it does is it creates the fair value gap, and then price just kind of gets held. Another 5-minute candle prints, another 5-minute candle prints, but then we're 15 minutes in, and then it kind of comes up against you. Well, not really against you, but it comes back up, and it really just wants to enter that 5-minute candle, and then it goes lower. I've seen that happen a few times. And it's interesting. I liked the time that all this happened in. Remember, ICT preaches time and price. So I liked that the 3rd drive of the 3 drives pattern happened at the market open, and then we displaced lower into the opening range. So the fact that the 3rd drive happened at market open, and then we displaced lower between 9:30 and 10, that's like a strong indication that our draw is to the downside, because when we have all these higher time frame PD arrays that suggest we're in a discount, and our narrative is to go from discount to premium. So the fact that all of this happened at this time, at this price being under the consequent encroachment of the 4-hour wick, at this higher time frame orange area, which is a daily fair value gap that we are expecting to then see lower prices off of. Then you have, so that's like the higher time frame, and then you come down to the smaller time frame, and we have price obeying the consequent encroachment. We see the 3 drives happen. We see it happen in the time we want, and it's like, okay, it would make sense, since we are not closing above this 4-hour consequent encroachment, to see displacement to the downside, because our daily bias is also that we're coming into this orange area for a discount to send it lower. And that's what's kind of happening right here. I mean, I think we're kind of seeing it, but the real move is going to be tomorrow for CPI. So you can see this kind of running up. So like we just kind of got in on a little fractal of price action, but where the real move on like the larger time frames is going to play out is like we might come back up, enter, and we might hang around these highs. We could even take out the highs and come back to this consequent encroachment and stay within this daily fair value gap on the orange. But the real move is going to be tomorrow for CPI. So here's kind of what's happening on the 15 minute. Again, we also have this dollar making lower lows. So if you see this, this is the 5 minute on the dollar. And it had just about the same high. So this was the high on ES. This was the high in the dollar. I mean, this was also another high for ES. And then it started making lower lows and lower highs at the same time that ES, you know, going into this 9:30 to 10, it was making lower lows and lower highs, still is. ES is also making lower lows and lower highs. So we don't really have the dollar on our side right now. That's probably the main reason why I'm just kind of sitting and watching price in this 10 o'clock hour. You could find a trade like this fair value gap. This could deliver. You could enter here, and this could deliver to the sell side. Could. It might not. It might not. And I don't want to be in a trade, because if it does the thing where, say you enter here and then we start, it takes a while to get to that draw on liquidity, then and you see the dollar say continue to drop, like all the reasons why you shouldn't be in a trade when the markets aren't aligned. So like when the indices and the dollar aren't aligned, you might see something happening in the dollar, and it's just like, should I be wary of that? Well, I don't know if I should, because they haven't been listening to each other all morning. So maybe I'll ignore it, and then say it runs against you and it's like, oh, I should have listened to that. It's like, that's why it's important, because those are the mind games that can happen. That's why it's important to make sure all your confluences are aligned. So we entered in 5 minute fair value gap here, right here. Could go lower. The dollar looks like it kind of wants to turn around a little bit, but it's still making these lower highs. I wanted to look at NASDAQ. Yeah, so look at NASDAQ. So this is the 1 minute chart on NASDAQ. I'm sorry if it's hard to see. Both indices made this low. NASDAQ made this low, but the NASDAQ ran up and then made a higher high right here, whereas ES is still down at this low. NASDAQ's kind of pushing up. So even NASDAQ and ES aren't fully listening to each other. Because on NASDAQ, this looks like a good kind of area to go long. I'm going to look at NASDAQ real quick. Okay, so NASDAQ, you can even see it wicked above that buy side and then came back down right there. Bam. The body's respecting that line. Just had the wick, came down. We have this 1 hour fair value gap that it was closed yesterday's PM session in, chopped around in overnight. But NASDAQ looks like it would almost want to continue going higher. For example, so see this low on ES right here? We're below it. That looks pretty bearish on the 15 minute and the 5 minute. On the 15 minute and the 5 minute. So especially on the 5 minute, you have this high, low, these two highs, and then on the 5 minute, this is like a major low right here. We're below it. On NASDAQ, we're not below it. So this is that low. On the 5 minute, we're still not below it. We also just made this shift, taking out this high after coming down. So if I was trading NASDAQ right now, I'd be hesitant to be going short. but ES shorts look better. So yeah, I was talking about this fair value gap earlier. Even if you entered at the bottom of it, if you entered right when the fair value gap entered, it looks like you'd be 5 handles. Wouldn't be unlikely. So the draw feels is definitely down. And then when you're trading, this isn't super high resistance, but it's definitely not low resistant. So you would have entered on this candle right here, and you would have waited 1, 2, 3, 4, 5, 6, 7. We'd be 7 minutes in, and it hadn't hit our target yet. And that'd probably feel like a long 7 minutes. I feel like saying that out loud definitely, like, I feel like a lot of traders like to meditate. I like to meditate every now and then. I think meditating's good, and when you do meditate, it kind of shows you like how long time can be. You know, when you're just like, if you're like waiting for something to cook and you're just like watching it, and a minute feels like forever. That feeling when you're like meditating and like every minute feels super long, or like say you're in a sauna and you're just watching paint dry, you're cooking, a minute feels so long. And the same thing is with trading. When you're in a trade and you're waiting for it to go in your direction and you're watching a candle, 1 minute just feels like forever. I'm also starting to notice ES looks like it's kind of barcoding. You can see all these highs are just like meeting the same exact high, 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 high. These two highs are the exact same. These two highs are the exact same. When it does that, I feel like it's just like, it's like entering into consolidation. It's just kind of like static barcoding, because like this is what it looks like if you were to go on the 1 minute and scroll all the way over to like right before the London session, between like at around like this time, like midnight. Price just kind of like barcodes, moves sideways. Like it's about to break out. Yeah, NQ definitely looks like, in my opinion, like it was going to break out to the upside. ES still looks a little heavy. If ES started taking out some of these highs, cool. I'm going to log off. Price isn't looking too good for me. So we had this trade that I ended up exiting because my trading view was acting funny and I couldn't find my stop loss. And then it delivered 5 handles. But I also, one of the main reason was probably because I couldn't find my stop loss. But when I saw, just to recap, so we entered right here. It's like, right, I did a market order right when the candle entered this fair value gap. The market order kind of gave me a fill below. But then I saw the displacement. I liked that displacement right here. But when it didn't continue to displace and we had this 1, 2, 3, 4, 5 minutes of sideways price, I exited. At first, I was telling myself, you know, if it comes up and touches the bottom of this up close candle, which it was doing, I'm okay with that. You can notice like all the candle bodies, none of them closed above the bottom of this up close candle. So I was like, okay, as long as like that's happening, I'm fine with staying in this short. But then it didn't continue to displace. The dollar at the time was making lower lows. And then my stop loss just like disappeared from trading view. And I was just like, we got to get out of this trade. I'd rather mitigate a loss right here than just wait. And then I remember I exited right here, looked at Twitter, saw this, and that was a little reassuring. But then we had this displacement that delivered to our target, and then we got lower. And I spoke earlier about how like if you were, I think it was like when it was right up here, price was up here, I was like, if you were a 10 handle trader, you would have had to waited. I was like that it hasn't delivered yet. And if you were a 10 handle trader, you would have got your 10 handles. But it would have taken a while. And now it looks like it really wants to go sideways. Oh, no, you wouldn't have even gotten 10 handles from that fair value gap entry. You would have got 9.75. And then you're in the dilemma of, oh, it was one tick away from my profit. Sometimes, and especially like on a stop loss, if it comes exactly to your stop loss, it'll stop you out. But sometimes on profit targets, it'll like touch your take profit and not trigger. Like you needed to go a tick over, especially for take profits, I feel like. But you would have got to 10 point or 9.75 and then like it's one tick away. I'm not going to touch it. I'm going to leave it. That's my level. And then then you're sitting through all of this and it's never coming back on you. And then you'll probably be like, oh, I should have just exited at 9.75 because now I'm exiting up here. But then like, no, maybe you were just, it's all these what ifs, and it's all in hindsight what ifs. And that's why I'm deciding not to trade in this. Yeah, so NASDAQ not taking out that low. Definitely looks like it wants to go up. Probably just going to go sideways. I do not trade UB. Okay. I'm going to log off. If price looks decent, I will maybe look into the market in the PM session. But the PM session the day before CPI, it's just like, why do you need to trade that? You don't need to trade that. Just wait until after. It's forcing. It's a force. Everyone, enjoy the rest of your day. Enjoy the rest of your day.